set that recording. So this is our second webinar looking at HMRC compliance. I'm going to start off by sharing a kind of video presentation that I've been working on, and let's let that person in. So just bear with me while I do a bit of screen sharing. And I'm hopeful I can still see everybody who's joining. Okay, so hopefully everybody can see that. And I'm going to set that going.
Going to walk through one of the most critical, but often underestimated, areas of compliance,
okay?
payroll. Specifically, we'll look at the most common payroll mistakes, why they matter, and how to avoid them in a practical, sustainable way. This session is especially important for organizations employing sponsored workers, where payroll isn't just about paying people correctly, it's directly linked to your legal right to operate. Let's start with a simple idea. Payroll. Every payslip, every submission, every data point feeds into government systems. That includes HMRC reporting through real-time information, or RTI, and increasingly, that data is cross-checked by UKVI. That means inconsistencies are no longer hidden, they're visible, and they're actionable.
Sorry, I'm just going to stop screen sharing because I realise that I can't see people coming in. Could you all hear the sound as well? Yeah, that's fine. Sorry. Right, I'll go back to screen sharing, but I won't be able to make it a big screen. Sorry. Okay.
Mistakes in payroll can lead to financial penalties, HMRC investigations, loss of sponsor license, and ultimately business disruption. UKVI will cross-check HMRC, real-time information data salaries, any hours changes, leave or absence taken by a worker, mismatching information on the Sponsors Management System, SMS. Real-time information, RTI, is a system introduced by HM Revenue and Customs, HMRC, that requires employers to report employees' pay and deductions every time they are paid, rather than submitting information annually. RTI is important because it ensures employees, tax and national insurance are calculated accurately in real time, helps HMRC keep up-to-date records of income, reducing errors supports benefits. Systems like Universal Credit, which rely on current earnings data, reduces end-of-year reporting burdens, like P35 forms which RTI replaced. In short, it keeps payroll reporting timely, accurate, and transparent. Full Payment Submission FPS. An FPS is the main RTI report. It includes employee pay and deductions, payee tax, national insurance, student loan repayments, if applicable, statutory payments, e.g. maternity pay. You need to submit on or before each payday. Every time you pay employees, you must send an FPS to HMRC. This is the core of RTI compliance. Employer Payment Summary, EPS. An EPS is used when adjustments or additional information need to be reported. This includes statutory payment recoveries, e.g., reclaiming statutory sick pay, apprenticeship levy adjustments, periods where no employees were paid, CIS deductions suffered, for contractors. You need to submit this, usually by the 19th of the following tax month. You don't send an EPS every payday, only when needed to correct or supplement FPS data. Deadlines and late submission penalties. The FPS must be submitted on or before the date employees are paid. EPS should typically be submitted by the 19th of the following tax month. Late filing penalties depend on the number of employees. 1 to 9 employees, £100 per month. 10 to 49 employees, £200 per month. 50 to 249 employees, £300 per month. 250 plus employees, £400 per month. Additional penalties. Interest on late payee payments. Extra penalties for deliberate or repeated failures. Payslips and hours records. If someone works 40 hours per week, the payslip should show 160 hours per month. Any leave taken must appear in the payroll breakdown, RTI submission, and internal records. Now let's shift focus slightly to monitoring. Payroll doesn't operate in isolation. It's part of a wider compliance framework. You should be actively monitoring. Absence patterns, sickness trends, unpaid leave, requests for reduced hours. This matters because all of these factors can impact salary and reporting obligations. For example, if someone takes extended unpaid leave, their salary may fall below the required threshold. That's not just a payroll issue, it's a sponsorship issue. Any significant changes must be tracked, documented, and reported where required, and importantly, you must maintain an evidence file. If it's not documented, it didn't happen. There has been cases that have been challenged in courts where UKVI have revoked sponsorship from looking at HMRC data. Monthly payroll checks. Let's move into something practical, your monthly payroll control check. Think of this as your internal safety net. Each month, you should be asking, was the full payment submission sent on or before payday? Was an employer payment summary submitted if needed? Do payslips reflect contracted hours? If someone works 40 hours per week, the payslip should show 160 hours per month. Does RTI match the payslips? Does salary match the sponsorship record? You should also check that there are no unlawful deductions, that any authorized deductions are properly documented, that salary thresholds are maintained, that payroll is fully reconciled, and that any variances are investigated. This isn't just admin, it's evidence of compliance. If you were audited tomorrow, this is what would protect you. Workplace pensions and auto-enrollment. Another important area is workplace pensions. Your responsibilities include assessing employee eligibility, enrolling qualifying staff, making correct contributions, integrating this into payroll. And don't forget, re-enrollment is an ongoing requirement. Mistakes here can lead to regulatory penalties, employee complaints, and reputational damage. Employers cannot make deductions directly from wages and payslips. There must be a separate agreement in place if the worker is required to pay for rent or uniforms. Sponsors will get an instant revocation if the UKVI find payments are being deducted directly from wages. There must be documented agreements for any required payments the worker needs to pay for rent or uniforms. What payroll records must be kept? Employers must keep accurate, complete payroll records for every employee. These typically include employee details, full name, address, date of birth, national insurance number, start and leaving dates, job role and employment status, pay and deductions, gross pay and net pay, PAYE tax deductions, national insurance contributions, student loan or postgraduate loan deductions, pension contributions, including auto-enrollment, statutory payments. You must have records of statutory sick pay, SSP, statutory maternity pay, SMP, statutory paternity pay, SPP, statutory shared parental pay, SHPP, supporting calculations and eligibility evidence. For RTI submissions, you will need copies of full payment submissions, FPS, employer payment summaries, EPS, dates sent and confirmation receipts, payments to HMRC, PAYE, and national insurance contribution amounts due and paid, dates of payment, any interest or penalties applied, other supporting records, such as timesheets or hours worked, expense and benefits records, PAYE coding notices, P6, contracts and salary agreements. HMRC requires payroll records to be kept for at least 3 years from the end of the tax year they relate to. For example, records for the 2023-24 tax year must be kept until at least the 5th of April 2027. Recommended best practice is to keep records for 6 years, as this aligns with broader accounting and legal requirements. Here are some practical steps you should take. Review internal procedures. Ensure you have robust systems in place to identify, record, and report changes in pay, location, job role, and absences as soon as possible, and at least within 10 working days. Audit sponsored workers' files. Check that all sponsored workers are being paid in line with the correct salary thresholds, have up-to-date HR files, and check whether any changes need to be reported. Unreported changes, such as time spent on maternity leave, resulting in a reduced salary, can cause salary data to appear non-compliant when compared with HMRC records, and it flags reporting breaches. Review recruitment policies. Confirm that the recruitment and onboarding of sponsored workers strictly comply with the immigration rules. Provide refresher training. Offer refresher training to HR teams, key personnel, and line managers so they understand their reporting and record-keeping obligations. HMRC audits are not conducted at random. Rather, they are typically prompted by identifiable patterns or risk indicators within an organization's payroll and compliance practices. Understanding these common triggers can help businesses maintain robust processes and reduce the likelihood of scrutiny. One of the primary factors that may attract HMRC attention is the submission of late or inconsistent real-time information, RTI. Regular delays or discrepancies in reporting payroll data can signal underlying administrative or compliance issues. Similarly, problems with PAE payments, such as late payments, underpayments, or irregularities, may raise concerns about an organization's financial controls and adherence to tax obligations. Compliance with national minimum wage and national living wage regulations is another critical area. Any indication that employees may not be receiving the correct statutory pay can prompt further investigation. In addition, errors in payroll reporting, whether due to miscalculations, incorrect employee data, or system issues, can increase the risk of an audit. HMRC may also focus on employment status concerns, particularly where there is ambiguity between employees and contractors. Misclassification can have significant tax implications and is therefore closely monitored. Likewise, unusually high or inconsistent claims for statutory payments, such as sick pay or parental leave, can appear anomalous and warrant closer examination. Rapid or significant changes within a business, including sudden growth, restructuring, or shifts in payroll size, may also act as triggers, as these changes can sometimes lead to transitional errors or gaps in compliance. Finally, organizations with a history of previous compliance issues are more likely to be subject to further review, as past behavior is often used as an indicator of future risk. By recognizing these common audit triggers, businesses can take proactive steps to strengthen their payroll processes and ensure ongoing compliance with HMRC requirements. Preparing for an HMRC compliance check. Before a check, make sure you can easily provide payroll reports and summaries, RTI submission records, FPS, EPS, employee files and contracts, evidence supporting statutory payments, reconciliation between payroll and accounts. What HMRC will look for: accuracy of PAE and NIC calculations, correct tax codes applied, proper treatment of benefits and expenses. Worker status, employee versus self-employed. Timeliness of RTI submissions and payments. How to prepare effectively. Reconcile payroll to HMRC account regularly. Run internal audits or checks. Keep documentation well organized and accessible. Ensure payroll software is up to date. Correct errors promptly, and report via RTI if needed. We are going to look at a case study: underpayment and HMRC UKVI data matching. A domiciliary care provider sponsored multiple care worker visas, but paid them less than the salary stated on their certificates of sponsorship, partly due to unpaid travel time between visits. HMRC identified national minimum wage breaches during a payroll inspection and issued arrears and penalties. UKVI cross-checked HMRC data and conducted a sponsor compliance visit, finding systemic underpayment and inaccurate records. The sponsor license was revoked for failure to meet salary and sponsor duties, and sponsored workers were given curtailment notices. Underpayments for travel time have become a common area where breaches have occurred, so we are going to look at this in more detail. Travel time is when workers are required to be traveling in connection with their work. Any travel from home to the office or the first care call, or from the office or last care call to home is not part of working time. This is the worker's commute. Travel time stops for rest breaks, e.g. the worker drives to the shops to buy food as they are traveling to take a break. If the worker is traveling to the next care call when their break is finished, this is classed as working time, and has to be paid as working hours. Let's look in detail at what you need to pay Jane for her day's work. Jane leaves home at 8:45 a.m. and travels to her first appointment at 9 a.m. Jane works from 9 a.m. to 10 a.m. Jane travels 20 minutes to her next care call and has to wait 10 minutes. Her second care call is from 10:30 to 11:30 a.m. Jane travels 30 minutes to her next care call. She works from 12 p.m. to 12:30 p.m. Jane takes a 30-minute rest break and then drives to the next care call, which takes 20 minutes and has to wait for 10 minutes. She works her fourth and last care call from 1:30 p.m. to 4 p.m. Jane drives home and arrives at 4:30 p.m. Even though Jane left home at 8:45, you do not pay her for the commute to work, the first care call, and you don't need to pay her commute home. Jane does not get paid for the 30-minute break. For her day's work, you are paying Jane for the total working time of 6.5 hours. How this is calculated. Care call 1 is 1 hour. Travel time is 20 minutes. Wait time is 10 minutes. Care call 2 is 1 hour. Travel time is 30 minutes. Care call 3 is 30 minutes. Travel time is 20 minutes. Wait time is 10 minutes. Care call 4 is 2.5 hours. If travel or waiting time is not paid, it reduces a worker's average hourly pay, which may cause their effective rate of pay to fall below the national minimum wage. This underpayment would be reflected in payroll records as insufficient wages for the total hours worked and could lead to serious consequences, including HMRC enforcement action, repayment of arrears to workers, financial penalties, and potential reputational damage for the employer. An effective and robust payroll framework is founded on strong coordination between payroll, human resources, and compliance functions. Close collaboration across these areas ensures consistency, accuracy, and alignment with regulatory requirements. This is further supported by the implementation of regular internal audits, which serve to identify potential risks, validate existing processes, and maintain ongoing compliance with evolving standards. Comprehensive documentation and meticulous record-keeping are also essential, providing a clear audit trail and ensuring transparency across all payroll activities. In addition, the delivery of accurate and timely real-time information, RTI submissions, remains a critical obligation, underpinning both regulatory compliance and organizational credibility. Continuous monitoring of employee data and payroll activity enables the early identification of irregularities or changes requiring attention. Where discrepancies are identified, prompt and decisive action is taken to mitigate risk and ensure resolution. Ultimately, while each of these components is vital, they are all sustained by a fundamental principle: a strong culture of compliance. Such a culture fosters accountability, reinforces best practice, and ensures that compliance is embedded across all levels of the organization.
Fabulous. Okay, so if there's any questions that anybody has from that, please do feel free to pop them in the chat, and I will aim to get questions answered. And next I'm going to hand over to Ed, if that's okay. So Ed's here from Leicester Aldridge, and he's going to carry on
listening to HMRC.
Hey Evelyn. Ed's going to carry on talking about compliance issues.
Thanks, Martha. Good morning, everyone. Hope you're doing okay. Thanks for joining today. So I'm just going to quickly share my screen. So hopefully, is that showing the slides, Martha?
Yeah, that's good.
Thanks. Okay, perfect. So yeah, there's going to be a little bit of crossover between what we just heard and what I'm going to be talking about. But generally, I'm going to be looking at what is considered paid time, what essentially you need to be paying your staff for when it comes to the work they're doing. So we're going to start off by looking at some a quick update on recent changes, because there have been some changes that have been announced since we last spoke. So we're just going to have a look at those. We're then going to have a look at the pay sponsorship thresholds that you need to be paying your staff. Then move on to the differences between working time and paid time, and then look at the particular problem areas. So the changes that have happened this month, we had the statement of changes in the immigration rules announced on the 5th of March. And so essentially these are the periods that you have to measure whether you've met the thresholds for pay for your sponsored staff over. And it's worth reiterating those, because obviously that's impacting on what we're discussing today. So if you are paying your staff at a frequency of monthly or less, so that's weekly, bi-weekly or monthly, which will be most of you, I I assume, then the pay reference period that you need to show that you've met the threshold for sponsorship over is a 3-month period. So essentially, over any three monthly pay slips, you need to show that on average you're meeting or exceeding the salary threshold, whether that's the sponsorship threshold or national minimum wage, whichever applies to the individual. You'll need to show that you've done that over those three pay slips. It's more rare, but if you're paying workers, say, every 2 months or greater, or at least greater periods than 1 month, then the reference period is 12 weeks. So that is that's appearance over 12 weeks. You need to show that you're exceeding the thresholds. And then, particularly for domiciliary care providers, where pay fluctuates from month to month, so where there's pay that might be more in 1 month and less in another month, then the reference period is 17 weeks. So over any 17-week period, you need to show that you're meeting or exceeding the salary thresholds. So that's the important pay reference periods for you to bear in mind when it comes to compliance. It was also announced that there was a higher English language requirement on settlement, so that reflects the current requirement for recruiting directly from overseas, which won't affect most of you. This will affect individuals when they're settling, so that has increased to a B2 English language level from a B1. It applies from the 26th of March 2027. So obviously not something you need to worry about too much, but your workers may well need to. And then we also last week had an announcement about the increase to visa fees. So again, not something that's necessarily going to affect you directly, but will affect your sponsored workers. So the health and care worker visa, that's was previously £304 for less than 3 years, or £590 for up to 5 years. That's increasing to 324 or £628. And then if you're sponsoring someone who doesn't fall under a health and care worker visa, those figures have increased from £885 or £1,751 for 3 and 5 year visas accordingly, up to £943 to £1,865. So just bear in mind that it's getting more expensive for staff to pay for their visas as well. So we'll move on to the pay thresholds then for sponsored employees. So for sponsored employees who've been assigned a COS since the 4th of April 2025, those thresholds are 25,000 per year or 12.82 per hour, whichever's higher. And that annual threshold is based on a 37.5-hour week. For everyone who is assigned a COS before that date, it's going to be national minimum wage that applies. The national minimum wage is currently 12.21, but will be increasing to 12.71. Just to note, we previously understood that every year there'd be an increase in the sponsorship threshold. However, unofficially, what we've heard from UKVI this year is that they haven't had time to look at this yet. So there's not going to be an increase to this threshold rate in April this year. It's going to remain at £25,000 or 12.82 until further notice. So there's not now going to be an increase that increases in line with national minimum wage when it comes to the sponsorship threshold. So something for you to bear in mind, it is going to continue to be those rates for sponsoring employees for the foreseeable. And when it comes to payment, there is some fluctuation permitted month to month. UKVI understands, particularly when it comes to domiciliary work, that there is going to be up and downs for pay, but providers should be able to show that the threshold has been met over the applicable period. So those periods that we saw on the previous slide. So essentially, this is what you need to be paying your sponsored workers to be compliant. And that takes us on to what is working time and what is paid time. So under the Working Time Regulations 1998, this deals with what is considered working time under UK law. And essentially, there's a 3-limb test to determine whether something's working time or not. So if it's time that they are spending working, that they're carrying out duties for their employer, and or at the employer's disposal, all of that is included and considered to be working time. It also includes any period which they are receiving relevant training. So that's training that you've agreed. We'll have a look at that in a bit more detail later. And also any other period that you have agreed with that individual that is going to be working time. Now, when it comes to paid time, that's dealt with under the National Minimum Wage Regulations 2015. And they are a bit less helpful when it comes to defining what that time is, but essentially under there it is defined as time spent working. And they don't always agree. There, as we'll see with some of the problematic areas that we're going to have a look at in a moment, there are differences between the working time regulations and the national minimum wage regulations when it comes to what is working time. And so this is time that you need to be bearing in mind when it comes to breaks and what they need to be paid for. So under the working time regulations, the following will normally be treated as working time. So these are the sort of things you'll need to bear in mind when it comes to compliance with the working time regulations. So paid overtime and some unpaid overtime, unless it's purely voluntary, in which case they're arguably not at your disposal, so they don't fall within that three-limb test. Time spent waiting or on call at the workplace or another place chosen by you, even if they're allowed to sleep, and we'll have a look at that in a bit more detail in a moment. Responding to telephone calls while on call, and that can be at any location. Traveling to incidents or appointments while on call. Travel time, where travel is part of the job, such as a traveling sales rep. This can include traveling to the first appointment of the day and returning home for the last appointment for mobile workers. And again, we're going to have a look at that in a bit more detail in a moment. Working lunches, work taken home at the request of the employer. And attending any work-related training, and then any other time, as I said before, that's treated as working time under any relevant agreement. So bear in mind that there may be exceptions, and again, essentially it's a case of going back to that three-limb test and checking whether the worker is working, carrying out their duties and at your disposal, unless they're receiving training or there's an agreement otherwise. So that's the test for whether something is working time under the working time regulations. And excluded under the working time regulations is going to be rest breaks, including lunch breaks and coffee breaks, daily and weekly rest periods, annual leave, time spent on call if they're not required to be at a particular place, traveling to the workplace unless the travel is undertaken following booking on, so essentially the start of their work, attending work-related social events, unpaid overtime and undertaken voluntarily, attending evening classes or day release classes that are not a requirement of the job. So that's not going to be agreed training. Working from home voluntarily and responding to telephone calls voluntarily out of hours, including when traveling. So that's excluded from the working time regulations. Now, there's not really any exclusions or inclusions under the national minimum wage regulations, just because, as I say, it's not particularly well defined and under those. And essentially what you're using this legislation for, so the national minimum wage regulations, that's you need to be referring to that when you're deciding what is paid time when it comes to salary. So when someone's paid at an hourly rate, when someone's exceeding the sponsorship threshold, so that's the time that is determined to be the sort of time you need to be paying to meet that sponsorship threshold. If they're working more than 37.5 hours per week. Otherwise, it'll be the annual threshold that applies. And then also it's the time that needs to be taken into account when you're calculating the 20 working hours per week for supplementary work and in-term work that you're giving to students. And the working time regulations, that's what you need to bear in mind when you're calculating rest breaks. So when someone's working more than 6 hours during a day, that's when they're due a rest break. So it's the time they spent working under the working time regulations that needs to be calculated for that. And then also the maximum working week of 48 hours, unless they've opted out of that. Again, it's the working time regulations working time that you need to bear in mind there. So that takes us on to some of the more problematic areas then. So the first one of these is travelling time. So and helpfully, the working time regulations is silent on whether travel to and from a place of work or between places of work should be considered working time. And so we're going back to the three-limb test for this to check what needs to be considered. So under that three-limb test, commuting time, that's not usually viewed as working time because obviously as an employer, you don't have control over how long that worker spends commuting, as it depends on where they've decided to live. So because they're outside of your control, that's generally not considered to be working time under the working time regulations because it falls outside of that three-limb test. And generally, a worker is not at your disposal until they reach the workplace. However, for other travel beginning or ending at home, that does become a bit more difficult. So where someone doesn't have a fixed workplace, under the national minimum wage regulations, this considers the time spent traveling to the first appointment and from the last appointment of the day is not working time. So that's not working time that you need to be paying for. However, under the working time regulations, it is considered to be working time. So you do need to be measuring the time spent traveling from the first and last appointment of the day when it comes to calculating whether someone is due a rest break or calculating their maximum working week. So yes, in practice, you don't need to pay for that time, but you do need to take it into account when calculating rest breaks. Now, the next one is waiting time, and again, particularly for domiciliary care providers, this is more important. So under the national minimum wage regulations, again, it's not defined under these, so it's not entirely clear, but there is case law here that indicates what should be considered to be working time. And HMRC takes the view essentially that because of this case law, any time that an employer requires a worker to be performing output work to be available at or near a place of work for the purposes of working is regarded to be working time. So essentially, if someone's turned up early for an appointment, essentially at that appointment they're performing output work and they need to be available at or near that place where they're performing that work for the purposes of working, and they're having to wait for the start of that appointment, then that falls within that, and that's considered working time. The only caveat to that is where there's sufficient time for the worker not to be deemed at the employer's disposal. So generally, in the case that this was decided upon, essentially, there wasn't a specific ruling on this, but it was a case where domiciliary care providers were deemed to need to be paid for time that they spent waiting. And the way that this was calculated was that where any time that fell under 60 minutes, which included traveling time and waiting time, that was considered to be time that they should be paid. I take the view that it's reasonable for essentially 30 minutes to be treated as a break because that fits in with the rest of the national minimum wage regulations and working time regulations. So essentially, as long as they've got a break of at least 30 minutes when they're waiting, that's time that they can essentially decide what to do with their time, so they're not at your disposal. But anything less than 30 minutes, that isn't enough time, and that should be treated as working time when it comes to waiting time. And under the working time regulations, it's usually considered to be working time. So any amount of waiting time is deemed to be working time under those working time regulations. Now, training, that's another more problematic area. So attending training, which has been approved by you, will generally count as working time. So this includes attending training during normal working hours at a place other than their normal place of work. So if they're having to go somewhere for the training, then that training time is counted as working time. Traveling during normal working hours between the workplace and the place where the training is provided. So again, traveling time is also included as working time there. And also receiving training in the working place. That is also considered to be working time and should be time that is paid for. And generally, where there's uncertainty over whether training takes place in normal working hours, because say a worker's hours are variable, it's resolved in the worker's favour. So in that case, if there is any uncertainty, you should be resolving any of that uncertainty in the worker's favour and considering it to be working time for time they should be paid rather than not. The working time regulations is silent on training time. So again, it's a case of deciding whether that time falls within the three-limb test. Mostly it is going to, because when someone's training, they're deemed to be at your disposal because you're asking them to do the training or you've authorized that they're doing the training. And then any traveling involved as well is going to be authorized by you and essentially at your disposal. Now, on-call working and sleep-ins, again, that's a really problematic area. So under the national minimum wage regulations, so what time should be paid, a worker who is not doing actual work is treated as working if they're available for work and are required by you to be available at or near the workplace. And there's two exceptions to that. So time at home is excluded. So if someone's on call while at home, any time that they're not spending working during that time is deemed to be non-working time. And then also sleep-in time. So time when a worker's not awake for the purposes of working is excluded, even if the worker is by arrangement sleeping at or near the place of work and is provided with suitable facilities for sleeping. So essentially where you require someone to do a sleep-in shift, any time that they're not actually called to be awake, to be working, that's not deemed to be working time where they need to be paid. You normally pay a premium for that, for them to do a sleep-in shift just because of the just to compensate them for agreeing to that. But generally, you don't need to be paying them their full pay while they're asleep. It's only when they're awoken to undertake work that you'll be paying them full pay. Now, under the working time regulations, it's slightly different. So it's likely to be deemed working time in full, even the time that they're asleep, no matter only if there's only a small chance of them being woken for work. So again, you need to be building in rest breaks and calculating the maximum working week when taking into account the whole of the time that they spend on call or undertaking a sleep in. The slight caveat is that we have had opinion from UKVI that say that any time spent on call working, including sleep-ins, should be considered to be paid time, and workers should be paid in full for the duration of that. Now, that's not official. There's not been an official decision on that, and if there was one, I'd consider that would be ripe for judicial review because it doesn't comply with the national minimum wage regulations, and so doesn't really make any sense. But that's the opinion. So essentially, when it comes to your risk, from a risk adverse point of view, the ideal is not to be having sponsored workers undertaking sleep-in shifts because there is a risk based on that advice that they may, you may be underpaying them for that if you're not paying their full wages for that sleep-in shift. And in that case, although it would likely be overturned by judicial review, there is time and costs that you'd have to bear in having to challenge that decision. So from a risk adverse point of view, it's whether you want to put that yourself in that position or not. I was on a call with UKVI the other day, and I did ask this question about generally whether national minimum wage regulations or working time regulations are what their caseworkers base working time on when it comes to calculating whether the pay threshold has been met. They didn't have an answer for that. They said it was a policy decision. And so my advice remains that because national minimum wage regulations determine what is paid time when it comes to pay for national minimum wage, it's also what reasonably should be considered paid time for meeting the sponsorship threshold rather than the working time regulations. But yeah, as I say, if there was a decision the other way, it would be able to be judicially reviewed, but it's additional hassle for you to do so. And then just to mention holiday pay at the end here when it comes to calculating this, because we do see providers face problematic issues with that. So employees have a 5.6 week holiday entitlement on a pro rata basis. That's the minimum. And so when you've got people who have fluctuating pay, so that's either in domiciliary care because their pay goes up and down, or it can be in say residential care, where that individual works different hours. So if they work more hours one week or work overtime, then essentially what you should be using is a 52-week reference period for calculating the rate of holiday pay that they receive, and that's based on their working hours over that 52-week reference period. And it's 52 weeks of work. So if they've had any period of, say, sick leave or family leave where they've not been on their normal pay, that period is disregarded, and you still have to go back 52 weeks, disregarding those weeks in between. And essentially, when you're doing that calculation of what pay they received, it needs to be all the time considered to be paid time under the national minimum wage regulations. So paid time on all those slides that we've had a look at previously, and also any overtime that they do. So if they do more hours for overtime, that needs to be taken into account. Or if they get a premium of pay for doing overtime, again, that needs to be taken into account. And so you go back over that 52-week period, you look at the total amount of pay over that 52 weeks, you then average that out, and you find the daily rate that they should be receiving for any holiday pay, for any period of holiday that they've taken, and that's what you should be paying as holiday pay. And yes, that takes us to the end of just a quick overview on what you should be considering as paid time. And as we've seen in the previous video, paid time, you then pay that to the employees and deal with your HMRC obligations. I don't know if there's any questions arising from that. No?
No, I don't think there's been anything in the chat either.
Okay.
Has anybody got any
Okay.
questions? Or if not, we will finish this session early and give you some time back, which is always really, really nice.
Well, that's good. It's obviously I've
Okay.
done a good job if we've stunned everyone into silence.
I'm just going to stop the